like Ben Bernanke, who is basically saying there's no connection whatsoever between the money he's printing and rising commodity prices. We know that the Federal Reserve is completely clueless, or if they understand what's going on, they are perpetuating it, that inflation is what they see as the solution. They think inflation is a get-out-of-jail-free card for the U.S. economy. And so as more and more people understand that, and as Ben Bernanke himself is kind of urging the world to abandon the dollar standard by basically saying, hey, I'm going to keep on creating money, and the rest of the world's going to have to suffer inflation unless they let their currencies appreciate. What he's saying is, we don't care what we do to the global economy. If you don't like it, lump it. He's basically saying, let them eat cake. Obviously, what's going to happen is the world is going to abandon the dollar and adopt something else as a reserve, and obviously the most logical replacement would be gold. And people are figuring this out.
In recent months, we've noticed the yellow metal has decoupled itself somewhat from the greenback, having to do with volatility out of the euro and the eurozone. Do you expect sound money to establish itself as the currency du jour?
Yes, I do believe that money will supplant money substitutes, and so gold is the real thing. The currencies are just pretenders. And I do think that some people get confused if they think that the gold is simply the mirror image of the dollar, and they forget that the dollar is just one but a number of fiat currencies. Yes, it is the world's reserve currency, and so it is more important than others, but sometimes gold is reacting to weakness in the euro, and so we have to understand that there certainly can be days where the dollar is up and then gold is up, and what that simply means is that the dollar is losing less value than the euro, and that both currencies are in fact falling. But if you simply look at the dollar's exchange rate against the euro, you can't just assume what's going to happen to the price of gold.
I wanted to move on to the unemployment rate. I'm sure you heard last week, dropped to 9%. However, we only had 36,000 new jobs created in January. That was well off the 140,000 expected by economists. What is the Labor Department report really telling us here?
That these figures don't have much meaning because obviously, we know some people left the labor force, and so that's part of the explanation, because when you give up looking for work, you're not considered unemployed anymore. And so obviously quite a few people gave up looking for work because there weren't many jobs created, but still a lot more people left the unemployment rolls than left the labor force. So it's hard to figure out what happened to all these people, because there were no jobs created, so why aren't they still unemployed? So, I don't know, maybe future government numbers will shed some light on it. But, I don't pay much attention to government numbers, and even the people who are finding jobs, unfortunately, they're finding jobs that are the result of stimulus, and those jobs are going to evaporate when the hangover from the stimulus sets in. These are not sustainable jobs because they're not where they need to be. They're not jobs where the market wants them. They're jobs where the government wants them. They're jobs in consumption and services and retail and healthcare and education and finance, and they're not where we need them. They're not in goods producing sectors. We're not producing more stuff. We're just finding ways to distribute the stuff that other people produce, and that is not a sustainable employment trajectory.
Okay, shift the focus internationally here for a moment. Egypt recently, the rioting, protesting, fears that it could spread, and perhaps even we might lose the Suez Canal, making oil shipments from the Middle East delayed, obviously, perhaps affecting the international economy. Are you keeping an eye on this, and do you think this could escalate, or has this passed?
The price of oil, had a small
spike
uptick initially when this happened, and it's really come back down and surrendered those gains. So I don't really think that that's what the problem is. I think the problem that's going to drive commodity prices higher, including crude oil prices, is not what's going on in Cairo, but what's going on in Washington, in the Federal Reserve in particular, with the printing presses. And, of course, what that means for other countries like China that have pegged their currency to the dollar and therefore must print their currency to buy up our currency. So it's really central bankers that are going to be fueling commodity rises, not what's happening in Egypt.
Okay, we've seen stronger than expected earnings announcements now for quite some time, for the most part. Earnings are better because folks are tightening their budgets, they're cutting off the fat and the excesses and whatnot, and, of course, eliminating jobs, and that makes the bottom line look more rosy. But really, at the end of the day, is that indicative of a more robust economy?
No, and of course, when you have interest rates artificially low, and a lot of companies, of course, are borrowing money, and some of their higher earnings result from lower debt service costs. And when companies' customers can borrow money at such cheap financing, they can spend more money, and so their top line can grow as a result. But we have to understand that all of this is temporary, and all of it will end when interest rates inevitably rise. and they will rise. And when they do, it's like pulling the rug out from under this phony economy. We've built this recovery on a false foundation, so it is not real and it cannot last. Muni bonds are getting destroyed, and treasuries have been falling. Treasury yields have been making new highs, and treasury bond prices have been making new lows consistently. See, the thing is that in the scheme of things, treasury yields are still low. So we can still afford the debt payments. But what's important is the speed at which rates are now rising and the trajectory of this incline. So, yes, rates are still low now, but 6 months from now, a year from now, they won't be low. 2 years from now, they'll be very high. I do think that the inflation that we are creating is a net positive for nominal stock prices. Because what's going to happen is the stock market isn't going to collapse, but the value of money is going to collapse. The value of bonds is going to collapse. So it makes more sense to own stocks than to own cash or bonds. But does it make more sense to own stocks than commodities? Does it make more sense to own stocks than gold? In general, no, because most stocks will underperform commodities or precious metals, but not all stocks. So there are some stocks that would do better. But the key is to understand the difference and how inflation will impact certain companies, certain stocks. But I think in real terms, stock prices, most U.S. company share prices will lose value if you price those stocks in gold, for example. But if you're going to price them in the dollar, well, it's going to be very hard for anything to lose value because the dollar is going to be losing value so quickly that it's hard for anything to lose relative to it.
In January 2012, a new law will be enacted that will require everyone who buys or sells precious metals, but $600 or more, will be required to comply with the IRS 1099.
It doesn't look like that's going to happen because the Senate has already passed a bill to repeal that portion. So obviously the House will go along with that. And so there's a pretty good chance that Obama will sign that one thing because it is very unpopular now, and the president is trying to pretend that he's friendly with business and doesn't want to impose new costly regulations. So he'll probably have to sign that. So I don't think that provision is going to see the light of day.
As far as precious metals equities, are you keeping an eye on this sector?
And I keep a lot of my own money in the sector. Gold prices, gold mining shares, I think, have underperformed the metal for most of this bull market, and I think that is in the process of changing, but it's been a slow process. But mining shares are cheap relative to their current and future earnings and the price of bullion, so I continue to recommend them to people who are suitable and understand the risks.
Any other sectors you're watching closely at this time? You like energy, for instance?
Yeah, I like all the commodity sectors. I like, the agriculture, industrial metal. People just have to make, sure not to fall into some of the many pitfalls. Like, in precious metals, I know we have a report coming out on how to avoid the big precious